Welcome to Alpha Insights. I'm Adam. Today, we're diving into some exciting developments in the cannabis sector, particularly around the recent report from Tilray and a significant vote in the US House. Joining me today is Joey, a retail investing expert who can help us unpack all these changes.
Thanks for having me, Adam. It's great to be here.
So, Joey, let's start with Tilray. They just reported record net revenue of about $218 million in their second quarter. What does this mean for them and the broader cannabis market?
Absolutely. Tilray's growth by about 5% year over year is impressive. They also mentioned that their international medical cannabis revenue grew by about 36%. This shows that not only are they boosting their income, but they're also expanding their footprint in lucrative international markets.
And they've moved to a net cash position. Can you explain why that matters?
Of course, when a company shifts to a net cash position, it means they have more cash than debt. This is crucial because it lowers their financial risk and gives them more flexibility for things like mergers or new product development.
That's an important point. Now, shifting gears to the political side, the House recently passed an appropriations measure that protects state medical marijuana programs from federal interference. Why should investors pay attention to this?
Great question, Adam. This means that Congress is signaling they won't be stepping in to mess with state-level programs, which is a big deal. It leaves the door open for potential changes in federal policy, including the rescheduling of cannabis. If that happens, it could lead to easier research access, banking options, and interstate commerce.
So, this appears to be a step in the right direction. However, you mentioned earlier that there are mixed signals from the states, especially with Oregon sales dropping and Massachusetts facing political challenges. How should investors interpret these local dynamics?
State markets can really be a mixed bag. For instance, Oregon's cannabis sales fell by about 3.5%, and they're experiencing record low wholesale prices. This can create margin pressure for companies heavily dependent on those markets. On the flip side, Massachusetts is reviewing complaints about a rollback of cannabis policies. These local challenges can offset the federal wins.
It sounds like there's a lot for investors to unpack. What aspects should they be watching closely in the coming weeks?
Investors should definitely keep an eye on updates regarding federal rescheduling and the final language of the recent appropriations bill. Also, watch for Tilray's upcoming quarterly reports, as well as ongoing developments in states like Massachusetts and Oregon. Any of these can sway market sentiment.
And what about the research side? There was noteworthy news regarding CBD's potential as an anti-tumor agent. How does this fit into the overall picture?
That's a critical aspect. Scientific findings, like the promising nature of CBD in addressing tumors, can highlight the sector's longer-term value. Companies invested in R&D can position themselves better as these medical breakthroughs can lead to sustained market growth.
Joey, this has been incredibly enlightening. Before we wrap up, can you give our listeners 2 or 3 key takeaways?
Definitely. First, investors should stay aware of both the federal policy changes and local state dynamics, as they can heavily influence company performance. Second, Tilray's growth and financial health are strong indicators for overall sector optimism. Lastly, don't underestimate the importance of medical research, as it can open new avenues of growth.
Thanks, Joey. That wraps up today's discussion on the cannabis sector. I hope our listeners feel more informed about the current landscape.